Hello and thank you for joining me, Fiona Cincotta, here at StoneX. And I am joined by Bertrand Oesterle, and we will be looking at several items. Last time when we caught up last week, we were watching out for developments surrounding Russia and Ukraine, planting intentions, and of course, Trump's tariff tantrum. So where are we with these now?
Morning, Fiona. Thanks for having me. So it's been quite an eventful past week, and some elements have already disappeared, and some elements are obviously much more in focus. So if I review the three points you mentioned, if we start with Ukraine, Russia, last week the specs were more or less going into a selling mode, thinking that that's it, the war is over, therefore Black Sea is going to be much more present on the world market, so it's bearish. And what we find out is that a week on, yes, those talks have not gone much further, and there's no resolution, there's no peace, there's no real ceasefire. It is a difficult situation still, and in a way, from a logistical point of view, which we were mentioning last week, not much has changed, and the trade doesn't expect anything to change in the short term anyway. Over the past 3 years, the trade has reorganized, and if we had an end to the conflict, it wouldn't change that much. So it's one bit which was the focus of the headlines last week. It was sold by the specs. It is less of importance this week. Then this early week, we had that big intention planting report out of the US. And that planting intention report is one of the major reports that could move the market in our grains and oilseed world. So the main figure to notice was the 95.3 million acres of planting intentions from US farmers in corn. I had said to you last week that the estimates were about 94, but the farming lobby was mentioning 95, 95 and a half. We've gone very close to that top estimate, and we go to 95.3. So it's a huge corn area, and the element which did gain our attention is the fact that that big corn area did hide, in a way, the fact that in wheat we're losing 1 million acre. So we're going to look in the future if that 1 million acre loss in US wheat area is going to come back to the forefront of discussions or not. And then obviously it's probably been the talk of all your previous forecasts this morning. It's all about the tariff tantrums from Trump, and we've had the big announcements yesterday, and people react fairly well to those new tariffs. So the reactions I've had this morning is that Trump's gone large, but it's nice that he's gone large in a way. He's gone in very strongly, and from this point, the market doesn't expect it to get worse. On the contrary, the market is more thinking that Trump has been so persistent and so strongly going into those tariffs that it's time for negotiations and getting out of those tariffs for the countries that want to negotiate. So a kind of feeling that we've seen the worst and it may get better from here. So the market doesn't expect a continued escalation of those tariffs, doesn't expect the world trade to come to a complete freeze. It's more about, we know what it is, how does it get better from here?
So what's the immediate market reaction that you've seen?
So naturally, the reaction like we've seen over the past 3 months, each time we have tariffs, the market has a tendency to correct, to go down first. And what has been interesting this morning is that, yes, we've gone down in grains and oilseeds. We've seen corn and soybean gap down. So it creates a technical element for us to watch to see if in the future we bridge that gap again to the upside. But what is interesting is that if we compare our market to other markets, we're not as down as people had feared. So grains and oilseeds are down 1 to 1.5%, when to compare, for example, energy is down 3%. So that comes back to the element we were mentioning last week when we said that the trade had been cautious on holding long positions. And so having reduced those long positions before in order to better weather that tsunami of bearish news, the market was less prone to a huge correction. We'll have to be cautious, obviously, of this afternoon. The US markets are going to waken up. Market participants in the US and North America will come later in the day. They might sell again. But it feels like, for the moment, we're weathering those new tariffs a bit better than other markets.
Mm-hmm. And so then what do you expect going forward? What's the outlook here?
So we've got some very interesting reactions from our market participants on what to look out for over the next 2-3 months now. So one is a direct consequence of the planting intention and the Trump tariffs, and it's very much the why have farmers in the US wanting to plant so much corn, 95.3 million acres. So last week I was telling you that the safrinha crop in the US had taken a bit of a shine away from the specs in corn, because we've got a planting that has gone quite rapidly by the end of the planting period, and most of it was done in Brazil for the second safrinha crop within the ideal planting window. So in a way there was less of a requirement to plant so much in the US. So we have to try to understand why US farmers have said, yeah, we'll just go with 95.3 million acres, which is a huge figure. So we looked at it from a domestic point of view and then from a tariff point of view. So before the tariffs came on, we saw China front-loading its imports from US soybean before the tariffs came on. Mexico did the same in corn. So the pace of exports of the US has been quite strong and ahead of the USDA figures. And in corn, it used to be 9% ahead. Now it's 5% ahead. So we start to see a bit of a slowdown of that ahead pace as the tariffs start to make those discussions and those imports difficult for the countries which are affected. So when you look at it from a political point of view, Trump was somehow voted by the rural America. So Trump can't just affect its rural electorate base. So we've seen a change in the way Trump and its administration have looked at how to support farmers. And initially when Trump came in, it was like, to hell with these biodiesel and biofuel and bioethanol rules. And now we see a change. We've seen the Trump administration actually going E15 all year through for bioethanol, which means that the ethanol stocks have gone up. There's an internal demand for corn for ethanol. And this past week, we've seen discussions about a new lobby consolidating other lobbies of the biodiesel industry to try to get the EPA to look at not 3.55 billion gallons of biodiesel mandate, but potentially to up that to 5.5, even 7.5. So there's a kind of drive to say, with the tariffs, the exports might be difficult. We want to protect our farmers. What can we do to support internal demand? It's bioethanol, it's biodiesel. And then beyond that, the Trump administration is now talking about a potential farmer bailout. And that farmer bailout story has been discussed for the past few days. And for a farmer, it's a bonanza. It's like, I'm going to plant whatever happens. It grows, it doesn't grow, I'm going to get bailed out. And if it grows, it either goes to export. If exports are difficult for tariffs, then it will go to domestic demand on the biodiesel, biofuel element. And if it doesn't, I'll get a bailout. So that explains that 95.3 million acre intention. And in a way, that's a bearish element domestically in the US, because it could mean a booming production, despite the fact that if you have a larger area, that larger area is going to be on certain places where the yields may not be as good, but still it's a much bigger area than the 90.6 last year. And because Chicago is such a lead market, we're going to have to watch the impact it's going to have on our markets overall. So that's the bearish element. And then if we try to be fair to the bulls as well, the bulls have been talking, as I mentioned last week, about the dryness worldwide, saying that the US, Russia, Eastern Europe, part of Australia for new crop, China and India are dry. Now, that story in the space of a week has lost a bit of a shine as well, in the sense that some people are saying that this dryness story is now a rear mirror story, and others are saying there are conflicting weather models between US and EU, and therefore we need to look at whether or not it's going to be a real issue for May or June. And that's why it becomes very interesting, because we've seen the specs with all those bearish news over the past week going very short in some of our markets. The prime example is the Paris wheat, where we've got a record short of 258.1 thousand lot short. That short was accumulated over the past 5 weeks. It has an average potentially of 225, 226 on May, in a range of 231 to 218.75 where it was accumulated. And so it makes the shorts in a way comfortable with all the tariffs, but at risk if there is a bullish story that comes along. So that short we feel is now not just in May, but also in Sep and Dec, because that short is bigger than the open interest of May. So it's obvious that it's also a new crop. And if you start having a problem for new crop because of a dryness issue, for example, then some consumers might try to grab any old crop left, so therefore May, in order to make out for what they could not potentially get if there's a problem for new crop. So that means that the May Sep, which we mentioned last week, which was 0.50 at the time, has continued its rally. So it's gone from -250 to 0.50 when we spoke last week. It was +4 yesterday. So that May Sep could become a problem for those specs, and we could get still an ugly exit from the specs if we have that dryness story that is a real issue. And the market is now very divided about it. The bulls are very much focused on the fact that it will still be an issue, and the bears are more mitigated, saying that it might be already in the rear mirror.
Thank you so much, Bert. You've certainly given us a lot to be thinking about and a lot to be watching out for. For more videos like this, please do like and subscribe.